Let's talk a little bit more on markets right now. Joining us is Peter Kraus. He's the chairman and CEO of Aperture Investors. And Peter, we're coming off of a really strong quarter, up better than 10% for the S&P 500, the best quarter since 2023. There are questions about whether it can last. A lot of good things that are happening right now, but we saw what happened in April with tariffs being put in place that were much higher than anticipated. We're up against another deadline now, July 8th and 9th, when the president's going to reassess and potentially put higher tariffs on countries that haven't been able to reach a deal. How do you feel about where things are right now?
Well, if we have another episode of Liberation Day, we know what the market's going to do. It's going to go down. The uncertainty that causes and the delayed in business decisions being made across the board will absolutely cause the market to fall.
But the market's doing 6,200 right now. I think the market is assuming there won't be.
No, I think the market has assumed that the drama over tariffs is overdone.
Right.
And at the end of the day, they will come to some accommodations. And it may take longer, but ultimately things will progress. Because when it doesn't progress, it's really a dramatically difficult problem, and the market reacts very negatively, and the administration doesn't like that. So I don't think that they're going to let that happen. There's always drama around, we had the drama around Canada this weekend. Now that's Japan. But at the end of the day, those things seem to work its way out, and the market doesn't really take a huge amount of concern over that. I do think that there are good things happening. The bill will likely get signed and pass. You can debate good, bad about the bill, but at the end of the day, it's absolutely stimulative. I mean, it's 3.3 trillion, 2.3 trillion, however you add it up, of additional deficit. That means more spending. Yes, it's lower taxes, but that's going to be good for the economy. And the market's going to actually reflect that if it doesn't already reflect that. At some point, we'll have a recession, and obviously the market will go down, but not in the next 18 months.
We had Rob Citron on earlier today, a hedge fund manager. He thinks you could see a 10% pullback sometime this summer, but that would be a buying opportunity.
Yeah, I mean, we've talked about this many times. There's always opportunities when the market goes down 10%. The market went down in April. Many people bought. That was a smart thing to do. That could definitely happen. Listen, September and October are my favorite months of the year. There's always something dramatic happening in September and October, and likely that's going to happen again, and it would be a buying opportunity.
You have raised questions about whether technology can continue to be the leadership group that it has. What concerns you? What do you think happens?
I think that AI as a broad concept is terrifically exciting. It's going to affect many, many different processes, companies, costs, opportunities, and it's got a long way to go. And I think those that are investing behind that over the long term are going to do well. We don't always know who the winners are. And so if you're betting on one particular company, that may be more challenging because that may not be the winner. But some set of companies that are exposed to a particular AI trend, that's going to be a winner for sure. What I'm concerned about is the valuation question. And, if you look at the large tech companies that have driven the market for the last 15 years, undoubtedly driven the market, how long can that continue? And I am concerned that investors are over-allocated to that space. They have more risk in that space. And as those assets get bigger and bigger, the risk grows. And I like diversification. And I do think that this bill that's going to pass Congress is going to focus on the domestic economy. And I do think domestically oriented companies, principally mid-cap and small-cap companies, are going to benefit. And they've been the laggards in the last 5 years, the significant laggards in the last 5 years.
I just think about the growth in technology. It was just a few years ago that we were wondering which company was going to be the first to cross the $1 trillion mark. Now we're wondering who's keeping $3 trillion on a daily basis.
Yeah. Well, look, the cash flows of those companies grow dramatically. They compound. They grow faster than most companies in the market. And investors are going to continue to reward that. No doubt about it. The question is the relative valuation of those companies versus others. And there's plenty of companies in the small cap, mid cap space that are also exposed to technology and also exposed to growth.
I was surprised at how well small cap did during the quarter. It's been unloved for a while. There were a lot of questions about whether tariffs would be much tougher for the small cap companies, but the Russell 4000 did okay.
Yeah.
In the
fact,
last quarter.
in fact, and since Liberation Day, the Russell has outperformed the S&P.
Yeah.
And Mag 7. Mag 7's underperformed significantly for the first 6 months.
So do you look at areas or even particular stocks within the small and mid cap?
Well, I never comment on stocks, so that's a little challenging for us. But I do think in terms of areas, again, the capitalization sectors that you mentioned, I think the small mid-cap area is a place that's underinvested. People have been very disappointed in that space over the last 10 years because it's underperformed. Yeah. So either people have cut back their investing, don't have any exposure there, and that's an opportunity for significant growth. And so if I were an investor and I looked at my portfolio and I didn't have any exposure there, I would add some.